In a surprising yet strategically timed move, President Donald Trump announced on July 2, 2025, that the United States has reached a significant trade agreement with Vietnam. The deal, finalized just days before Trump's July 9 deadline for new global tariffs, signals a calculated pivot in Trump's aggressive tariff strategy and sets a new precedent in US-Asia trade relations. The heart of the agreement lies in tariffs and market access. Under the New Deal, Vietnam has agreed to a 20% tariff on all goods exported to the United States. In exchange, US companies will receive full, unrestricted access to Vietnamese markets, allowing American goods to flow into the country tariff-free. Trump celebrated the agreement, proclaiming that the US had secured total access to Vietnam's markets, a notable diplomatic win for his administration. Another critical aspect of the agreement is its hard stance on transshipment, a practice where Chinese goods are rerouted through countries like Vietnam to avoid direct US tariffs. To counter this, the deal imposes a heavy 40% tariff on any goods suspected of being transshipped through Vietnam. This measure is aimed directly at stemming one of the major loopholes in US trade enforcement, tightening controls on Chinese exports disguised as Vietnamese. This deal is especially significant given that Vietnam was previously hit with a steep 46% tariff earlier in the year, as part of Trump's broader Liberation Day tariff campaign. Though the tariff had been paused, it served as a warning signal to countries unwilling to play ball with Washington's terms. The July 9 deadline was set as a hard stop for over 90 nations to either reach a bilateral agreement or face stiff penalties. Vietnam, sensing the economic pressure and potential export losses, chose to strike a deal just in time. From an economic standpoint, the move carries broad implications. For American exporters, the deal provides a clear advantage, an open door to one of Southeast Asia's fastest-growing consumer markets. This is expected to benefit industries such as agriculture, machinery, and tech hardware, all of which have been lobbying for greater access in the region. For Vietnamese manufacturers, however, the 20% tariff is a bitter pill to swallow, likely to raise prices on goods headed to US shores and possibly reduce their competitive edge. The financial markets responded positively, though cautiously. US-based companies with deep manufacturing ties to Vietnam, including brands like Nike and Under Armour, saw stock bumps on news of the deal. The tariff clarity offers these companies more predictability, especially after months of uncertainty around Trump's shifting trade positions. However, not everyone is celebrating. A recent study from JPMorgan Chase estimates that Trump's broader tariff strategy could end up costing US mid-sized businesses over $82 billion, 0 cents. The burden of tariffs often trickles down to the consumer, potentially leading to higher prices on everyday items like clothing, electronics, and furniture. Economists warn that the fluctuating nature of Trump's trade deals creates an environment of economic instability, especially for importers and global supply chain operators. Still, Trump's strategy appears to be deliberate. Vietnam's agreement is the latest in a pattern of high-pressure trade negotiations where the threat of punitive tariffs is used to extract bilateral deals on US terms. Earlier this year, similar tactics were employed with the United Kingdom and Mexico, yielding rapid, if contentious, results. Trump supporters argue that this tough stance is finally leveling the global playing field, bringing manufacturing and trade benefits back to American soil. As attention now turns to India and Japan, Trump's trade team remains in high-stakes negotiations. India has been in talks to reduce existing 26% tariffs, while Japan appears to be resisting concessions altogether. The July 9 deadline looms large, and with Vietnam now off the list of targeted nations, pressure intensifies on those remaining. Critics of Trump's approach say this tariff-first strategy is short-sighted, fostering short-term deals while risking long-term economic consequences. But to Trump's base and business allies in key manufacturing sectors, the Vietnam deal is seen as proof that tariffs can be used as leverage, not just punishment. What remains to be seen is whether this aggressive stance will yield sustainable economic benefits, or whether it will ignite further tension in an already fragile global trade landscape. For everyday consumers, the impact might be subtle at first, small changes in prices, limited product availability, or even supply chain delays. But for industries dependent on Southeast Asian manufacturing, this deal could be a game changer. Vietnam, once seen as a safe alternative to China in the global supply chain, now finds itself navigating a far more complex trade relationship with the US. For better or worse, the Trump-Vietnam deal signals that the age of laissez-faire global trade may be giving way to something more transactional and far more unpredictable. As we wait to see how other nations respond to the July 9 deadline, one thing is clear. Trump's trade playbook is back, and it's rewriting the rules.